Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, ITEL.
All right, you heard the man. My name is Mark ITEL, host of the Mr. Mortgage Show, and you are in the right place if you want the mortgage and real estate news and data that you need to make better real estate and mortgage decisions for you and your family. And I get it. It's a super confusing time out there right now. There are a ton of headlines swirling around, and sadly, most of them are in a big brown cloud because there definitely seems to be a poo cloud of headlines flying around out there in real estate mortgage. So we always dig past that. We get to the data because oftentimes the big scary headline is not so scary once you read the data. Often the data actually even contradicts the headline. So we're going to get into all that. I know a lot of people during the week are still asking, does it make sense to buy? Does it make sense to sell? You know, where are interest rates going? Are we headed into a recession? What's the recession going to do to the market? I mean, I know these are all questions that people have. And we're going to address all of that. We're going to address the data of the week, and we're going to get to your very specific questions. So while we're getting started, if you have questions, I encourage that you call or text those questions to us. You can call or text the Anytime hotline, which is 561-291-8569. That's 561-291-8569. Dom, my producer, is always manning that hotline, and he'll get your questions on the air. So let us dive right in. I mean, you know, again, we're still digesting the 75 basis point rate hike that the Fed initiated. It's still kind of reverberating through the market, and rates, you know, bounced right up there. We were seeing rates in the high fives and low sixes, depending on programs. They've seemed to kind of find a range this last week, so that's the new norm. And I hate that saying new norm, but that's the reality that we're in right now. So the good news is that there's not a lot of sign that there's a bubble. There is a sign in some markets that we're seeing a little bit of price easing. And one of the places that was noticed is the average loan amount released in the Freddie Mac report this week showed loan amounts were slightly lower. Now, you can't necessarily dissect from the data if that's just because people are putting a bigger down payment down or a slightly lower home is selling, but we are seeing an average loan size decrease a little bit. So that would indicate that there is some easing in pricing. And I think that number, don't hold me to this, but check the Facebook page because I posted the article. I think it was around 7%, 8%, somewhere in there. Not a significant pullback, but you know, the first signs of some easing. And then we in our local practice have seen some changes. We're not seeing prices pull back, but what we are seeing is a willingness from the seller and buyer coming together and working together, meaning, you know, maybe a slight price concession, or maybe the seller's paying some closing costs. So I know this week we had a first-time buyer come through our office, and they were receiving a $2,500 closing cost credit from the seller. So super cool to see that. It's exciting that we're kind of transitioning back into a more normal market. And I think because of that, we're going to see, you know, just more opportunity. And I say it all the time, read past the headlines to find the opportunity in the market. And maybe the ability to negotiate again is that opportunity, right? Because in the past, that wasn't the case. The seller was saying, you know, bring me a pint of your blood, your life insurance policy, and your firstborn, and then I'll consider your offer. And now we're back to reality where sellers want to sell, buyers want to buy, and there's a willingness to make a deal. So that side of all of this is encouraging. And I think you're going to find for yourself, if you're able to buy a property, that there's more willingness, more ability, I guess, to find a deal. And if you're going to sell a property, it's still a good time to do it because there are still more buyers than sellers, even at these interest rates. And honestly, a lot of that is driven by rent. And that's what I want to talk about just quickly, because if you're not going to buy a home, your choice is to rent a home. And we're seeing ridiculous rent increases still continuing. And that surging rent price is driven by a lot of things, right? There is some speculation that if you prevent landlords from collecting rent during a moratorium period, and they're still required to pay their bills, right? They're paying taxes, they're paying a mortgage, they're paying maintenance, but they're not allowed to collect income, that they're going to make up for that on the other side of it. So I do believe we're seeing a little bit of that because they had tremendous losses to offset. And I think if we could do that over again, we probably should not have initiated a moratorium if we were giving people additional dollars in the form of unemployment benefits, PPP money, and stimulus checks. We should have at least asked them to keep paying their bills. But nonetheless, we can't go back and undo it. But I think that's a part of what we're seeing with rent increases. And then also, too, kind of an unspoken thing. We always say greedy landlord, but the reality is when we're in a rapidly appreciating cycle, the taxes and the insurance on these commercial properties go up significantly. And that cost has to be passed on to the tenant because, this isn't UNICEF. The landlord's in business to make a profit, as he should, because he's got a lot of risk, a lot of skin in the game. Those costs get kind of kicked down the path, if you will, and end up in a rent increase. And then lastly, when we're in a rapidly increasing interest rate environment, a lot of those big loans that, apartment complexes are purchased with are adjustable rate mortgages that are based on, the cost of funds. So if the cost of funds jump 0.75 of a point, there's more carrying cost in that altogether. So it's not just greedy landlords. It's just another inflationary sign of the time. So if you want to, preserve your payment and hedge yourself against that, that's where, homeownership is the answer. And we don't know when the rent increases are going to stop. I mean, at some point they have to. But the interesting thing about rent is if your rent doubles, which is, I haven't heard anybody's rent actually doubling, but if it was to double, you could go get a roommate and then you've got the same rent. Or if you and your girlfriend or boyfriend share an apartment and you've got an extra bedroom and the rent doubles, you go and get two friends, another couple, and they split the rent with you. So it's easier. And I know this doesn't sound compassionate, but it's easier for renters to offset the increase than buyers because the buyer can't just throw another borrower or a couple of friends, onto the deal to make it work because, we have to fully underwrite them as buyers. So I think that's another reason why we've seen these crazy rent increases because the tenants have been able to absorb them with some creativity by bringing in additional roommates. And at some point, that two-bedroom apartment is overflowing, so they can't do it anymore. And I think, that's going to be one of the reasons why we see some leveling at some point in the near future. But right now, it's still cheaper in a lot of these metros to buy than it is to rent. So, until we see unemployment go up, until we see rent stabilizing, I think home purchases still make a lot of sense. And then lastly, you hear me say it all the time, the home prices are based on supply and demand, and there's just not any supply coming to the market. Builder permits are not where they need to be to offset the new household creation. And I think a lot of people just don't want to sell right now. They're happy where they are. They have a ton of equity and a ridiculously low interest rate. They probably can't even sell and buy in their own neighborhood at this point, so they're not going anywhere. But I just wanted to share that. I mean, real estate still makes sense. It makes sense for so many reasons. You got to get in the game at some point and start creating some equity wealth for yourself, and you can only do that through real estate. And hey, that's why your landlord loves you, because the reality is you're buying a house. Your only choice is, are you buying it for your landlord or are you buying it for you and your family? And at this point, if it's not yours, you're buying it for your landlord. I mean, I've got countless number of clients who have refinanced over the years to offset the medical expenses of a family emergency. Or, one couple pops into mind as I'm telling that story. They refinanced, pulled cash out, and they bought a condo in Gainesville for their kid to stay in during college. And then guess what? After college, they kept it and they rented out as an investment property in an Airbnb for parents who are visiting their kids. And then lastly, I have a super cool situation where a friend of mine, Dennis, just did a reverse mortgage, and he will never have another mortgage payment again, and he is super excited. So my point in telling that story is you got to get in the game to have the equity to manage the emergencies and the opportunities that life throws at you, because there's not another investment opportunity that creates that amount of wealth with that amount of ease. So anyway, you hear the music behind me. That means we are going to go into a break. We're going to be back in 2 very short minutes, and we're going to get to all your questions on the other side of this break. Get your questions ready and call or text them to 561-291-8569. That's 561-291-8569. We will be back in 2 short minutes. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel. You are listening to the Mr. Mortgage Show, and you heard the announcer. If you want your questions on the air, just call or text them to 561-291-8569, and Dom will get your questions on the air to me. And before we jumped into that break, you heard me talking about rent increases, and they're supporting home values or they're getting pulled along with home values. And one can argue either side of that topic. But the reality is rent prices are still going crazy. And I pulled a report and I wanted to share this with you. Here are the average rent increases year over year in some of the cities. And obviously these are the biggest jumps and the biggest decreases. But Austin, Texas, for a one-bedroom experienced a 121% increase year over year. I mean, that's crazy. How can you get 4 people in a one-bedroom? That's nuts. Long Beach, California, 62%. Tacoma, Washington, almost 50%. So we're still seeing crazy increases. There were some markets that had a decrease. I mean, Cleveland, Ohio, 24%. Pittsburgh, PA, down 18%. And Indianapolis was down 15%. So we're seeing some settling, but in the most desirable areas, it's still super, super expensive to rent a place. And I think that's why there's still a lot of demand on the mortgage side. And lastly, I want to share this. If you are hesitating to buy a property because you think now's a terrible time, that we're at the peak of a bubble, I just want to share a quick story with you. And you might have heard me reference it before, but I don't know that I've ever completely deep dived this story. But I've got a client who purchased a property at the all-time height of the market in 2005, and they bought a townhouse for $382,000 or $3,000. And, the market crashed. The house next door went into foreclosure and sold for $180,000. And thankfully, they liked where they lived. They stuck it out. Their mortgage payment over the last 17 years was never more than they would have paid for rent in that same community. And they just stayed and they liked it. And the cool thing was they bought the property with an adjustable rate mortgage. I looked all this up because I think I touched on this last week. They were at 5.25% for a 5.1 adjustable rate mortgage. Well, they bought at kind of a peak in interest rates, peak in home values. So as the mortgage started to adjust, their payment went down. So what they did was they just kept making the same payment. And when they could, they threw a little extra money at it. But here's the moral to the story. It's been 17 years. They now own that property free and clear. And we ran the value report for them a couple weeks ago. And the house will appraise at $525,000. So you tell me if that was a bad decision, right? They paid $380. It was worth as little as $180 during their ownership cycle, but now today it's free and clear, and they have $500,000 plus in equity. And all they did was go home and make their payment. They didn't cut out their Starbucks. They didn't skip vacations. They paid their bills. So that's why I say equity wealth is the easiest wealth to create, and time heals almost all in real estate. So lastly, I'm going to share this. This isn't my saying. It was shared with me, and it's worth repeating. In real estate, you don't make money by waiting to buy. You make money by buying and then waiting. So that's the last little thing I want to share with you, because I know right now a lot of people are rethinking the opportunities in front of them as far as buying. And hey, guys, if you already own a place and you've got friends, family, your children, they're considering buying and they're coming to you for counsel, jump on the Facebook page and pull down the data that you need to help them make the better decision, because we're creating a generation of renters, and that's not good for anybody, because a lot of the wealth that you have right now today, as you're sitting at home listening to this show, is equity wealth that was created either in the home you own now or properties that you bought and sold along the way. So hopefully you found that interesting. If you do, I appreciate you sharing the message. You can find a ton of information on the Facebook page. Go to Facebook and search The Mr. Mortgage Show. And then we do a Daily Dose podcast now. That's hosted at www.themrmortgageshow.com. And then Dom posts the recorded version of the radio show each Saturday afternoon after we're on the air. It pops up as a podcast replay. So there's a ton of good information there. But anyway, we are going to keep this train rolling forward. I always appreciate this time of the show because we are going to dive into your questions. So let me throw it over to Dom and see what we have question-wise.
Mike sent us a text. We're ready to sell, but want to try without a realtor. Any tips on making sure the buyer has a good mortgage approval? We've heard some horror stories.
Hey, yeah, there are definitely some horror stories around this one. I think Dom said your name was Mike. So, hey, congratulations, one, on being ready to sell, because I think it's still an incredible market. And congratulations on the courage necessary to do this for yourself, because it is going to take a courageous soul, but you can do it. You need to assemble a team, and I'm going to answer your mortgage approval question here in 1 second. I see a lot of people jump into this for sale by owner, and I get it, right? The market's so hot, and you might as well put that extra commission in your pocket. I get that, desire to do that, but you're going to need a title company or a title attorney to facilitate the transaction. Make sure that both you and the buyer are protected through the transaction, that all liens are cleared and satisfied. You don't want anything to carry over that somebody could come back and sue you for. There's title insurance necessary if the buyer is going to have a mortgage. So you're going to need a rock solid title agency or a title attorney. And if you don't have one, I'm happy to get you in touch with one. We work with a lot of really, really good title professionals. And I've heard some horror stories on the title side. I had a great conversation with a title agent. He owns a couple agencies, but he was sharing with me that he closed an estate sale and there were 5 heirs and 2 of them were in jail. So there can be complications in a transaction. So a good title agent or title attorney, and a title attorney can assist you with the contract as well. A title agent can't, but a title attorney can. So I can get you in touch with someone who can help with that too. But your question was regarding mortgage approval. So the big thing is you're going to want to make sure that they've been run through the underwriting software, the AUS, the automated underwriting system, and that they have a full approval and not just a pre-qualification. Because honestly, a pre-qualification is meaningless. Mike, if you called me right now and said, hey, I've got a 720 credit score, I make $150,000 a year, I have no debt, and I've got $200,000 to put down, what would I be qualified for? And I'd give you an answer. Now you know you're pre-qualified for X amount of dollars. I've not looked at your credit. I've not looked at your income documentation. I've not verified anything. All I've done is give you a pre-qualification. So make sure you have a bona fide pre-approval, that they've been run through the automated underwriting system or AUS, and that they have a full approval, and that income, assets, and credit have been verified. And here's the thing, they might not want to share all of those intimate details with you, and I get it, but they would have had to share it with the mortgage professional who wrote that letter. And then if you see super round numbers on an approval, income of, XX .000 or assets of 51,000 even, that's likely not verified information because it's very rare that there are perfectly round numbers on an approval. And lastly, if you don't have somebody to review those for you, I welcome the opportunity to do it. We have a for sale by owner program that we have in place at my practice where not only do we assist in getting you in touch with all the people that you need on your side to facilitate the transaction by owner, we also offer to review all of the approvals, and then anyone who's not approved, we offer to pre-approve them for you. So, and I get the question all the time, Mark, why are you willing to do all that work for us if you're not earning a fee? And the simple answer is, my business is originating mortgages, and, there might be 10 people interested in your property. And by helping you get your deal through the process, I get an opportunity to meet 10 families who may need my services in the future. But anyway, that's why we do it. Plus, I just like to help. I mean, that's why we're on the air. I love answering your questions. So hopefully that gives you the info you need. I welcome the opportunity to talk to you about that further and encourage you to give us a call if you have any questions. So you're going to need a title attorney. You're going to need somebody to review those approvals to make sure that they've been AUS approved. And that's it. You hear the music behind me. That means we're going to run into a short break. The break will be 2 very short minutes, and Dom and I will be back with you on the other side. Thanks. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show, where it is our goal each week to give you the data and the info, the tips, the tricks, the strategies that you need to make better real estate and mortgage decisions for you and your family. So we are going to continue the show rolling forward with more of your questions. This is always my favorite part of the show. And if you have questions, call or text them to 561-291-8569. Or I haven't mentioned it yet, you can also submit those via the website, and you'll find that at www.mr.mortgage. Never a .com, just type in mr.mortgage, and there's a little contact us box at the top, and you can fill your question in there, and then Dom will get you on the air, or get it read to me on the air. So speaking of Dom and questions, let me throw it over to Dom and see what we have.
Laura left this on the hotline. We are looking at a vacation home, but the rates we're being quoted seem very high, higher than we are hearing in the news. Is this correct?
Hey, that is a great question, and sadly that is correct. So here's what happened. Obviously, all rates have increased significantly in the last several months, or last few months anyway. last year, this time, we were underwriting second homes with the same interest rate and same guidelines as a primary residence. And then what happened in the end of the third quarter of 2021, there was a surge in second homes. And one of the indicators of the bubble last time, now they go back and they look at everything that happened pre-bubble in the early 2000s, was a big surge in second homes. And what was going on, knowing that you could get primary residence interest rates and guidelines, a lot of people were just simply abusing the program. They were lying. They were buying an investment property, renting it out, and maybe a property in Florida if they lived in New York or across the coast. And it was never intended to be a second home. It was going to be a rental property, but they were using that program. So when the lender saw that surge in second homes hitting their portfolios, they got nervous that there was a risk level that was about to be triggered. So what they did was they increased the pricing on second homes. And sadly, they price almost the same right now as investment properties. So, yeah, it's unfortunate that you're seeing that, but it doesn't surprise me because, as I mentioned, there was a significant hit to second home pricing. And hopefully we see it ease because the second home markets are still performing really, really well across the board. So I hope that answers your question. I'm sorry that's the case for you. If you want to talk about some strategies around that, give us a shout during the week. I'll be happy to help. We're using adjustable rate mortgages right now to get people in some of those second home products at a lower payment. So that may be something that'll help you in the future. But let's keep the questions rolling and throw it back over to Dom.
Another text, this one from Troy. I have some charge-offs on my credit. Most are from the hospital. Do I have to pay these before I could get a mortgage? My Credit Karma score is 631.
Yeah, Troy. So that's a great question. And there's a different answer today than there was 6 months ago. So here's something that's super cool. There's a new rule going in effect with how derogatory medical items are reporting on your credit reports and how they affect your score. And 2 of the 3 rule changes go into effect July 1st. So starting July 1st, any medical collections that have been paid, and I know this doesn't apply to you because you're asking if you have to pay them, but any medical collections that have been paid can no longer report. So if you've got something that's been, that you've been carrying around on your credit report for a while and it's been pulling you down, after July 1st, now give this some time because all of the repositories and reporting agencies are kind of gearing up for this. It kind of reminds me of that scene in that Mel Gibson movie where they were, charging across the field going to war. Everybody's waiting for these rule changes to impact credit scores on July 1st. So it may take, a few weeks for all of this to shake out, but paid medical collections can no longer report. Another cool thing is they're giving you now 12 months before a medical late can even report for the first time. So the reason they're doing that is they realize that oftentimes we're even unaware that we have a medical late. Maybe we thought our insurance company paid it in full and the doctor billed a copay that we were unaware of, and we just kept sending that information to the insurance company, and suddenly the letters stopped coming, so we thought we were okay. And 6 months later, we find out that we've got a late or a collection on our credit. And I know this from experience because I'm talking with people, oftentimes, and they're finding out about these medical lates and collections for the first time when we're doing a credit review. So medical lates, it takes 12 months now for them to post. And then sometime at the beginning of next year, they've given themselves some time to get this one sorted. Medical collections under $500 won't report at all. So in your case, Troy, if they're under $500 and you're going to be waiting until next year, they're not going to report at all. So, and then to answer your question very specifically, it's going to be dictated by the loan program that you're applying for, because some loans will forgive medical derogatory, some will overlook them, some will require them to be paid. And I'm happy to walk you through that if you have additional questions. So give us a shout during the week. I'd love to walk you through that and see if we can't help. What else do we have, Don?
Cameron sent this text. I own a few rental properties and I'm trying to buy more. My bank says I can't have more than 4 mortgages at one time. Are there any other options?
Hey, Cameron. Yes, there are other options. So what most likely happened is your bank may have a rule of their own that says they can't carry more than 4 loans on their portfolio with one individual borrower. And in the, gunslinging old days of the early 2000s, when we were marching into that bubble, you were allowed to have 10 properties, and then some of the subprime lenders changed that to 15, which is part of the reason why we got in trouble, and most likely the reason why your bank is limiting you to 4. But the good news is there are many non-QM lenders, and non-QM just means non-qualified mortgage, and that's not a bad thing. It just means it's not a conventional loan program. In the old days, they were called Alt-A. But anyway, I'm saying that to share with you that non-QM lenders will allow you to have multiple properties as an investor, and some of them have no limit at all. And we have a full book of non-QM investors that we write loans to. So I'd love to be number 5 on your portfolio if you're looking to buy a property. But hopefully that helps. I would encourage you to seek outside your bank and look to someone who can fund against a non-QM wholesale line and get you those properties locked up for you. Hopefully that gets you the information you need, but we're going to keep this rolling. I'm going to throw it to Dom for another question.
All right. Keith emailed us this question. I have a mortgage on my house now, and I want to keep it and rent it. Can I use my VA entitlement to buy the new house? I never used it before.
Hey, Keith, that's a great question. And I'd love to know why you didn't use it the first time. And who knows, maybe you were encouraged not to use it because you were in a market like we just came out of where the VA and the FHA borrowers weren't getting a fair shake. But yes, to answer your question, the answer is yes. You can keep your current property and rent it out and use your VA loan to buy your new primary. And I encourage you to do it because VA rates are, some of the lowest on the books right now, and you can borrow 100% with no mortgage insurance. And the most important reason why you should use it is because you can. It's called entitlement for a reason, brother. I thank you for serving our country, and use that VA loan and buy that house that you're looking at. And if you haven't locked down a lender, I'd love to be your guy. So hopefully that helps. But yes, you can keep your current, rent it out. And there is a couple of caveats. So we need to know how long you've owned your current property, if you've pulled cash out of it in the form of a refi lately, those type of things. But the answer to your question is yes. So hopefully that helps. Let's see if we can squeeze one more question in.
All right, here's a question from Tammy. My dad says he'll help me buy a house, but he doesn't want it to be on the mortgage. Can we do this? What are the steps?
Hey, Tammy, great question. And yes, you can do that. Dad can gift you the down payment and help with the closing costs. So he doesn't have to go on the loan as long as your credit and your income support the guidelines and the carry of the mortgage payment. Then we can use Dad's money to get you into the deal in the form of a gift. So there are a lot of nuances around that, and I'm happy to walk you through it. But the short answer to your question is it is doable. We do it all the time, and I'd be happy to help you do it. So you hear the music rolling up behind me. That means it's time for another break, and it's a short one. We're going to be back in 2 minutes to take more of your questions and continue to dissect the real estate mortgage news of the week. So hang in with us. We'll be right back. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel. You are listening to the Mr. Mortgage Show, where it is always our goal to get you the information you need to make better real estate and mortgage decisions for you and your family. So we are going to keep that going, but I'm going to encourage you to get those questions on the air by shooting us a text or giving us a phone call to 561-291-8569. That's the Anytime hotline, 561-291-8569. And during the week, that pushes to my office. So write that number down if you ever need us. You can call it anytime. You actually can call it at 3 a.m. I just won't answer it. It'll go to voicemail. But when we're not in the studio, that pushes to my office. You can get your questions to us via the website, which is www.mr.mortgage. That's mr.mortgage, never a .com. Just type in mr.mortgage, and there's a little contact us box on the upper right-hand corner of the page, and you can put your questions there. And then a lot of the data that we use, we post on the Facebook page. So check out Facebook and search The Mr. Mortgage Show, and we're going to post all of the info, the rent charts, everything that we talked about will be there after the show. So there's a lot of good info there for you too. So anyway, speaking of good info, I'm going to do my best to answer your questions, and let's keep those questions rolling. Let me throw it over to Dom.
Teresa sent this one during the commercials. We talked to a reverse mortgage company about 6 months ago, and they gave us some estimates. We just talked again this past week, and they're telling us the available equity is lower. This doesn't make sense to me. Feels like a bait and switch. Will you share your thoughts?
Hey, Teresa. So sadly, it's unlikely that it's a bait and switch, only because interest rates have moved up so much in the last 6 months. And you said 6 months ago they gave you so just for the listeners who are unaware of how a reverse mortgage works, when you start the process and you start the conversation, there's what's called a proposal is created, and it shows you the available equity and the projected growth of the equity as well as the growth of the outstanding debt over the term of the loan. And all of that is in that proposal package. So what determines how much equity is available to you are three things. Assuming that you qualify, these three things determine how much money you have access to. One is your age, one is the interest rate, and the third is the property value. So in 6 months, I'm guessing that your age hasn't changed or you've gotten older, unless it's what was that movie with Brad Pitt where he got younger? But anyway, we know your age hasn't changed or it's improved from the standpoint that you're older. The property value likely has increased, which is a good thing. However, interest rates have doubled. So the reason that affects how much equity you have available is there's a projection of the equity accrual because you're not making a payment. So if they loan you $500,000, that interest gets added to that loan every month. That's how it works. So you don't have to make a payment. And if the interest rate is 6, obviously that number grows faster than if it's 3. So when they're pulling the numbers today or this week, they're using the interest rates of this environment, which has significantly changed. So that's most likely what's impacting that available equity portion of it. But you know me, I love the reverse mortgage product. I believe in it. I believe that for the right people, it can be life-changing. And I also believe it's not for everybody. So if you want a second opinion on that, or you want me to run some numbers just to confirm that for you, I'm happy to jump in and answer any questions you have. Just give us a call during the week. 561-291-8569 is the Anytime hotline. And that, I promise you, I know the math around a reverse mortgage better than I can remember my own phone number. But I'd be happy to help you, Teresa. So just give us a shout. But anyway, let's keep your questions rolling. I'm going to throw it over to Dom and see if he can't get us another one on the air.
Gary sent us a text. We are in contract to sell our house. The buyers are telling us the appraisal is low, so they're no longer approved. Is this right? Why would the bank care if they pay more? I appreciate you explaining this to us.
Hey, Gary, that's another great question. Here's the thing. It's most likely that they're no longer approved. What's more likely is the amount they're approved for is lower. And how that works is the bank always loans a percentage of the sales price or the loan amount, whichever's less. So to use very round numbers for this conversation, if the sales price was $100,000 and they were approved for a 90% loan, well, that's $90,000. But if the appraisal comes back at $80,000, they're only going to be approved for 90% of $80,000. So now their loan amount is $72,000, and it's up to them to bridge that gap. So I would dig a little bit deeper on this one because I don't think what they're saying is they're no longer approved. I think the loan amount has been reduced because the appraisal is lower, because the bank is never going to loan on the higher of those two numbers. It's always going to be the lower. So sales price or appraised value, whichever is less. And it's logical, right? Because that's where your skin in the game stops. If you pay $100 and it's worth $120, they're not going to give you credit for that $20,000 overage, but they are going to nick you for the difference. So what might happen is they might not have enough cash to bridge the gap, so they're not qualified to fulfill the obligation of the transaction because they're going to have to dig in their pocket to cover that shortfall if they want to move forward. So that may be a nuance where they're technically no longer approved because they don't have enough cash to close the transaction. Because in addition to needing a down payment, most lenders require that they have some reserves because they don't want anybody ever to zero out all their assets to buy a house, because then they have no money to move in with and get started, and we always need reserves. So but yeah, if you want to talk this one through off the air, I'd be happy to, because I think it requires some more information on both of our ends to have a really good conversation around it. But I'm guessing what happened is their loan amount is reduced because of the appraisal, and they either don't have enough cash to bridge the gap, or maybe they don't want to bridge the gap. So hopefully that helps clear some things up, but I'm happy to dive deeper with you during the week should you wish. So let me throw it over to Dom for another question.
Another text, this one from Peter. I have good income and can put down a large down payment, but my credit score still sucks from my divorce. What is the minimum credit score to get any type of mortgage? I've heard about a hard money loan, but I don't know what that is or if it will work for me.
Hey, Peter, you are not alone. There is a brotherhood surrounding you with guys who are carrying bad credit from their divorce. And it's frustrating. It totally is frustrating because I've seen it happen on both sides, right? Wives too. There are women out there that were carrying a lump of potatoes around for a husband, and now all they have to show for it is the crappy credit that still remains on their credit report. So, and exes can be vengeful. I've seen some circumstances where one party was required to pay a car payment or a house payment, and they didn't refinance the debt out of the joint name. So, husband and wife still have a joint account, and husband's supposed to pay for it, but wife starts going to the gym, looking good. She gets the young buff boyfriend, and the husband says, you know what? I'm going to stop paying that car payment or that house payment. I don't care about my credit, but I'm going to ruin yours. So, yeah, I say all that only to let you know you're not alone. It happens to a lot of people. And to answer your question, there are loan programs available in the 580s. 620 is kind of a target number that you're going to want to hit. And 580, you can get funded. I mean, we did a 570 credit score with an FHA loan, but they put 30% down. But in your question, you mentioned that you have a big down payment. So I share that only to one, say you're not alone, so don't beat yourself up. And two, there are options out there. And lastly, you mentioned a hard money loan. So what a hard money loan is, it's a private investor. It could be a hedge fund. It could be a money management fund, but it's a private investor. It's not a lending organization, and it typically requires a larger down payment, usually between 25 and 30%. Usually the loans are interest only, and they're higher interest rates, and they're good for guys who are looking to flip property or buy a property, rehab it, get it leased out at a higher rate, and then get takeout financing in place. So a hard money loan is just a lily pad. It's a stepping stone, and they're not bad. They're great tools for the right circumstance, but it's usually a private investor, and rates are somewhere between 8 and 12% in today's market with those. So happy to guide you. I've got some hard money people I can refer you to if that's your only option. But to answer your question, 580 should be your target. 620 is a comfort zone for getting you a loan. So hopefully that helps. And give us a shout if you have questions. We're going to be right back on the other side of this break. We're going to be gone for 2 short minutes, but we will be right back. Thanks. Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallygreatagents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallygreatagents.com, www.reallygreatagents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now, 561-291-8569.
All right, we are back. My name is Mark Eitel. You are listening to the Mr. Mortgage Show, and you heard the announcer. If you want your questions on the air, you can call or text them to 561-291-8569. That's 561-291-8569. That's the Anytime hotline. Visit the website, www.mr.mortgage. That's mr.mortgage, never a .com. Just type in mr.mortgage and go to the upper right-hand corner of the page, hit the Contact Us link, and type in your question. Dom will get your question on the air. And lastly, you hear me reference it every week. There's a ton of useful data, all the articles that we use, the rent reports, the interest rate charts. I post them on the Facebook page. Just check out Facebook and search The Mr. Mortgage Show. And hey, leave us a comment, like, share the page. We would certainly appreciate that. So appreciate all the questions that you've given us so far. We've had some good ones. I know I just looked out the window, and I think that's Peter's ex-wife out there shoving a screwdriver into the tire of my car. She didn't like that. But anyway, we're going to keep the questions rolling. Let me throw it over to Dom and see what we have teed up.
Kent wants to know, were you in Home Depot last Sunday buying a well pump?
Hey, Kent. So, yeah, that was me. I told you it was me. You didn't believe me. For the listeners, I want to share a story. And I shared something like this once before. I was in a convenience store getting a beverage, and I thought the lady knew me from the radio show. So I was a little caught off guard because I thought I was recognized, and of course I wasn't. So I had a Mr. Mortgage T-shirt on, and I was handymanning around the house on Father's Day. And I was dirty and sweaty, and I went into Home Depot, as Kent referenced, to get a well pump. And I don't know about you, but I kind of get lost in a haze in Home Depot. So I'm staring at all the PVC fittings and trying to figure out what I need while I'm blocking this poor guy in. And he looks at me and he says, "Are you going this way or that way?" And we kind of have this awkward moment where our carts are, pirouetting around one another in the aisle. And he starts laughing. I had the Mr. Mortgage t-shirt on. So he says, "Are you Mr. Mortgage?" Now, here I go again. I think, yeah, he must be a listener to the show. I totally forgot I had the t-shirt on. So I said, "Why, yes, I am. Do you have a question? Do you listen to the show?" And he just shook his head and smiled and pointed out my t-shirt. And we had a little laugh, and I shared with him that I do the show. So, hey, Kent, thanks for following up and listening. I'm super excited that you took the time to tune in, and it was fun and funny meeting you. So yeah, that was me, dirty and sweaty in Home Depot buying a new sprinkler pump because my other one died. So anyway, thanks for that. And hey guys, thanks for all your questions this week. We've had some really, really good questions. And you heard me share at the top of the show about hanging in there and, finding the opportunity in this market because they're still out there. And all of the questions today just kind of reinforce that. People are moving and shaking and they're finding opportunity. And let me share one other thing. We're doing a daily podcast and it's just me at my desk. It's not professionally produced, so forgive the sound quality, but we just drop it every day. At the end of the day, one thought. And I talked about I think it was Thursday I did it, about chasing the dream but not the deal. And what I meant by that was we just came out of an environment where people were overbidding and putting themselves in harm's way to get a property under contract because they were chasing the deal. And we're not in that marketplace anymore. You've got the opportunity to step back, negotiate. There are more properties coming to the market, so you've got some choices. So settle in and make the best decisions for you. But don't give up on chasing the dream because just as I mentioned in this the segment before or a couple segments ago, all of the opportunities that equity wealth create for you, if you give up on chasing the dream, you're never going to have those opportunities. And it makes a significant difference in your life to have that equity to lean back on. And I challenge you, if you're sitting at home in the home that you already own and you're happy, I bet the majority of the wealth that you've created through your life has been in the form of equity, either the equity in the property you have or equity that you cashed out along the way. So encourage those around you to make the decision to jump in, help them, introduce them to the show, have them call me. I'll be happy to help them. So on that, this is my ask. I'm going to ask you, if you have any friends or family or coworkers who have real estate questions, who have mortgage questions, they're thinking of buying, is it a good time? They're thinking of selling. What do we do? Should we refinance? How do I get a mortgage? Introduce them to the show. I would love to answer their questions. All of those resources I mentioned, just share with them. The Facebook page, The Mr. Mortgage Show, Mr.Mortgage, www.mr.mortgage, or check out the podcast page, themrmortgageshow.com. So with that, thank you so much for spending another day with us. Dom and I will be back next week, same time, same station, to dive into more of your questions. Have a fantastic week. Thanks.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages, right here on The Mr. Mortgage Show.
Are you a rock star real estate agent? I mean truly one of the best? If you are, let's talk. This is Mark Eitel, host of The Mr. Mortgage Show, and we are currently expanding our network of rock star referral partners. If you think you have what it takes, we'd love to connect. Just visit Mr.Mortgage. That's www.mr.mortgage. There's no .com. Just type in Mr.Mortgage, hit the contact us button, and let's talk.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at SOFLappraisal.com. That's SOFLappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. SOFLappraisal.com. And tell him you heard this on the Mr. Mortgage Show.